Some of the best performing stocks in the entire market right now, and insiders are dumping shares as fast as the rules allow them to. I'm Alex Carter. Welcome back to Wealth Signal. 3 companies. Triple-digit stock gains over the last 1 to 2 years. And right now, at this exact moment, the executives running all 3 of them are selling shares. Today, I'm going through why that's happening, whether it should actually scare you, and what the real story is underneath the headlines. I went through the insider trading filings, the last few earnings reports, and the analyst notes on all 3 of these companies before recording this, so we're working off the actual data, not just headlines. If you're serious about understanding what's actually moving these stocks, not just the noise around them, hit that subscribe button right now before we get into it. Here's what we're covering: Seagate Technology, Texas Instruments, and Cloudflare. Same exact pattern of insider selling across all 3, but by the end of this video, I'm going to tell you which one of these 3 I think deserves the closest look right now, and I'll warn you now, it might not be the one that's had the biggest run. Let's start with the part people usually get wrong. Insider selling sounds scary. A CEO or a CFO dumping a huge chunk of shares in a stock that's doing great. Your first instinct is to think something's wrong, that they know something you don't. That fear made a lot more sense decades ago, before the regulation we have today. Back then, insiders could trade on information the public didn't have and quietly get out before bad news hit, or load up before good news broke. Today, that's a different world. Executives have to disclose what they're doing, and most of it runs on prearranged trading plans they set up months in advance, not a panicked exit at the drop of a hat. So why does insider selling still spike when a stock takes off? 3 practical reasons. 1. Most of these executives get paid in stock, so when the share price triples or quadruples, their entire personal portfolio gets thrown out of balance, and selling some is just basic rebalancing. 2. Taxes. A massive unrealized gain eventually turns into a massive tax bill, and executives sell to cover it. 3. It's simply human nature to lock in some profit after a run like this. None of that by itself tells you the growth story is over. And the sector matters here too. All 3 of the stocks we're covering today sit inside the AI infrastructure buildout, the data centers, the chips, and the security layers keeping all of it running. That sector has thrown off gains so large, so fast, that almost every executive holding stock in these names has an obvious incentive to take some money off the table. High insider selling in a hot sector isn't unusual. It's expected. First up is a name most casual investors have never really paid much attention to: Seagate Technology. When people talk about AI memory, almost all the attention goes to HBM, the high bandwidth memory sitting directly on the GPUs, the kind of memory everyone associates with NVIDIA and Micron. Seagate isn't that story at all. Seagate makes the storage that holds the data when it isn't actively being crunched by the AI. The flash and magnetic drives, the cold storage layer underneath the whole operation. DRAM and HBM are short-term memory, constantly refreshing. Seagate is where the data actually lives. That distinction actually matters a lot. Every single data center being built right now with tens of thousands of GPUs also needs enormous amounts of long-term storage capacity, because none of that AI data disappears once it's used. It has to be stored somewhere, at scale, across hundreds of data centers being built around the world right now. Seagate is one of the operators positioned to deliver exactly that. And the results are showing it. This stock is up more than 640% over the last year. That's not a typo. 640% in 12 months on what most people would call a boring old hard drive company. So this is where the insider selling enters the picture. It's broad-based. This isn't one nervous executive quietly exiting. It's the entire C-suite selling, together, and the volume has been ramping up as the share price climbs. On the surface, that might look like a red flag, but look at the actual reasoning. A 600% gain throws almost anyone's personal portfolio out of balance completely, even before you factor in the tax bill that comes with locking in profits at that scale. Selling into a run like this isn't a warning sign by itself. It's what you'd expect any rational person holding stock-based compensation to do. If anything, it would be more unusual if they weren't selling at all. So what does that mean if you're actually holding this stock or thinking about getting in? The demand story hasn't changed. Every one of those hundreds of data centers still under construction still needs the storage Seagate makes. That's what's actually reflected in the analyst and institutional activity around this name right now, not the insider selling. Imagine you'd bought this stock a year ago with no real conviction about the AI infrastructure boom, just a value play on a beaten-down storage company. That investor is sitting on a 640% gain right now, and they're still being told by analysts to hold because the demand behind it hasn't slowed down at all. So the realistic expectation going forward isn't another 640% year. That kind of move is rare by definition, but the setup for continued, steady growth as this build-out keeps expanding is still very much intact. This isn't a story that's finished. It might just be quieter from here. Now let's shift to a completely different kind of company, one you might actually remember from math class. Texas Instruments. If that name rings a bell, it's probably because of a calculator you were forced to buy in 7th or 8th grade. What almost nobody realizes is that same unglamorous company just quietly became one of the most important names in the entire AI build-out. Texas Instruments doesn't make anything flashy. Analog microchips, power control, sensing, connectivity. For years, this company struggled through a massive global chip oversupply, a period of pure sluggishness that lasted well over a year. Then, roughly 18 months ago, inventory normalized, and the AI data center build-out arrived right on top of it. The mechanism is straightforward once you see it. Every data center packed with tens of thousands of GPUs needs the GPUs connected, monitored, and kept from overheating or drawing too much or too little power. That's sensing and connectivity, and Texas Instruments is one of the few companies that can deliver those products at the scale hyperscalers actually need. When one company is spending tens of billions of dollars a quarter on chips, going into hundreds of billions of dollars of data centers, someone has to supply billions of dollars worth of sensors, connectors, and power modules underneath it all. That's Texas Instruments. The result is a stock that's up around 80% year to date, coming from a company that's been publicly traded since the late 1960s. Think about that for a second. There are shareholders who have been holding legacy positions in this company for decades, watching it compound quietly in the background long before anyone was talking about AI. Same story with the filings here. Look across the leadership team, and you'll find the exact signature we just saw with Seagate, spread across multiple executives, picking up speed right along with the stock price. If you've been with this company for years and you're getting paid in stock, taking some of an 80% gain off the table isn't a red flag. It's just what compensation-driven selling looks like. What actually matters going forward is the long game here. Right now, it's the data center build-out doing the heavy lifting for this stock. But the bigger opportunity over the coming years is physical AI. Embedded processors going into everyday connected devices, the entire Internet of Things layer that needs exactly the kind of chips Texas Instruments has been making for decades. This is a company with a genuine long-term case on top of the current AI infrastructure demand, not instead of it. So is this one still worth getting into if you don't already own it? Based on the earnings trend, the profitability, and the fact that analysts and institutions are still buying into the story, the honest answer is probably yes. But at these prices, the smart move is picking your entry point carefully, rather than chasing the stock at any price. Two stocks down, both up massively, both seeing heavy insider selling. Our last stock today is a very different situation, because it's the only one of the three that's actually had a rough stretch recently. Before we move on, everything I've referenced visually in this video is saved as a downloadable summary file in our Wealth Signal Telegram channel, along with every past and future videos file. Links in the description. Go grab it. If this breakdown is actually helping you think about these names differently, smash that like button. It genuinely helps this channel grow. Cloudflare. If you've followed this stock at all over the last couple of quarters, you probably know it's had a rough ride. A lot of volatility tied to what people have started calling the software apocalypse fear. The idea that AI is going to make software companies like this one obsolete. But zoom out, and this stock is still up around 400% from its 2022 lows. This is the piece that makes the company matter so much for AI specifically. AI cannot exist safely without cybersecurity. You can build the models, you can build the data centers, but if none of it is secure, at best it's unusable, and at worst, it's dangerous. Cloudflare operates as a frontline reverse proxy. Internet traffic gets routed through its network before it ever reaches the actual servers behind it, filtering out threats at the edge. And this isn't a small regional operation. Cloudflare runs infrastructure across roughly 200 cities globally, giving it genuinely broad coverage for its clients. And, once again, it's the same signature showing up in the filings, spread across the executive team, accelerating right alongside the stock, with a sharper jump earlier this year than we saw in the other two. But there's a piece of this worth thinking about directly. If these executives genuinely believed AI was about to gut their business, the far more logical move would be to quit and go somewhere else entirely. Not sell some stock while staying on to run the company. And the earnings support that read, yes, growth has been slowing, but that's simply the law of large numbers at play. The bigger a company gets, the smaller any dollar amount looks as a percentage. Even through that slowdown, Cloudflare has consistently outperformed expectations. And now, AI itself is actually re-accelerating growth here, largely driven by agentic AI systems, which are pushing an exponential increase in internet search and query traffic. Traffic that has to pass through security layers like Cloudflare's to be safe. So think about what happens if you'd bought Cloudflare right at the bottom of the software apocalypse panic, purely on the bet that this fear was overblown. That investor would already be sitting on real gains, and would now be watching a company that's not just surviving the AI disruption narrative, but is actually one of the businesses benefiting from it directly. Right now, the stock appears to be consolidating inside a trading range after breaking out of a longer one, with analysts leaning bullish and expecting the next earnings release to confirm the re-acceleration story. If that plays out, there's a real case for meaningful further upside from here over the next couple of years. Not a guarantee, but a case backed by the actual trend in the numbers. So of these three names, Cloudflare is the one where the debate is actually most alive right now. It's not a clean, one-directional story like the other two. There's a real bear case being made against it, and the insider selling gives that bear case a little extra ammunition on the surface. Even though, when you dig into the actual reasoning, it holds up far less than it first appears to. So let's come back to the question I opened with. Three stocks, all with heavy insider selling, all up massively. If I had to rank which one deserves the closest look from here, let's count it down from the one I'm least excited about to the one I think is the most compelling. Number 3. Cloudflare. I still think there's a real long-term case here, and the fundamentals genuinely support it. But it's the one with the most active debate, the most recent volatility, and the least clean setup right now. I'd want to see one more strong earnings print confirming the re-acceleration before treating this as a high-conviction name. Number 2. Texas Instruments. This is the steady compounder of the three, decades of history, a genuine long-term thesis around physical AI on top of the current data center demand, and consistent execution. It's not the most exciting story here, but it might be the most dependable one. And number one, the one I think deserves the closest look right now, is Seagate. Not because it's had the biggest run, even though it has. It's because almost nobody is talking about it the way they talk about the GPU and HBM names, even though the demand for the storage it provides is growing at exactly the same pace as everything else in this build-out. Sometimes the most overlooked part of a supply chain is the one still worth watching the closest. Which brings me to the bigger point sitting underneath all three of these. Investing isn't about finding one magical stock that only goes up. It's about understanding what's actually driving a business and separating a real signal from noise that just looks scary on the surface. Insider selling on its own told us almost nothing useful today. The fundamentals underneath each of these three companies told us almost everything. This is my read based on the research I went through. Your situation, your risk tolerance, and your portfolio might call for something completely different. So always do your own homework before putting any money to work. If this video helped you see these three stocks differently, that's exactly why I make these. So hit like on your way out. Subscribe with notifications on if you want to catch the next breakdown the moment it goes up. And drop a comment. Out of these three, which one are you watching the closest right now? And if you want the visual summary file for this video, join the Wealth Signal Telegram channel. Link is in the description. Next up, we're staying inside this exact same AI infrastructure story, because insider selling is only one signal, and there's a lot more worth breaking down. I'm Alex Carter, and I'll see you in the next one.